Hi friends, welcome to weekly view on markets. This week we have seen a sharp cut in Nifty index. The market has corrected. It has dropped below the crucial support levels. Let us look at the different indices. Nifty has closed with a loss of 2.67%. Uh, it dropped by 478 points during this week and closed at 17,465. Bank Nifty dropped by more than 1,000 points, closed with a loss of 2.97% at 39,909. Mid-cap index fell by more than 530 points with a cut of 1.76%, ended at 30103. Small cap index also posted about 2.08% loss, closed down by 195 points and closed at 9,221. India Weeks rise sharply by more than 8% and closed at 14.18. Let us look at the performance of different sectors. All the sectors closed in red. There was not a single sector which closed with a gain during this week. PSU banks, metals, realty sector, media all closed with more than 5 to 6% losses. Remaining all sectors like commodities, auto sector, pharma, private banks all lost about 2 to 3%, and remaining all sector ended with a loss of 1 to 2%. This week has broken the crucial support levels and created a kind of panic selling in the market again. Why this panic has set in? Because the US Fed is likely to rise interest rates further, and the rise in interest rate and a hawkish statement from US Fed commentary, FIIs have been selling and exiting from the emerging markets, and they have been exiting from India also. That is one of the reasons. And also, many negative news coming about Adani Group companies also created a panic in the market. Most of the banks ended in red, which have got exposure to Adani companies. Then LIC, which has got debt as well as equity exposure to Adani stocks, also corrected sharply during this week. Let us look at how the technicals look in the market. This is a daily chart of Nifty. We can see Nifty has been falling from 18,800 levels, which it touched down December 22. And from there, it has been continuously making lower tops and lower bottoms. This shows that Nifty is in an intermediate downtrend. Now, this week ended with creating some kind of double bottom. So, whether this double bottom will hold and do a trend reversal, we'll have to wait and watch for a few more days. If market and Nifty index picks up from these levels, then this can be considered as double bottom and Nifty may pull back and Nifty can go up to 18,000 levels in coming weeks. Otherwise, we may see further down move creating another lower top and lower bottom. This is about Nifty. Let us look at Nifty mid cap index. This is a daily chart of Nifty mid cap index. Here also we can see this looks like a kind of triple bottom. This is first bottom, second bottom, and looks like third bottom. If it breaks this, then there may be further down move. Otherwise, Nifty Mid Cap Index pulls back. If it pulls back for in the next week, then the mid cap index can go up to 31,000 levels. Let us look at Nifty Small Cap Index. This is daily chart of Nifty Small Cap Index. Here also we can see the chart has made kind of triple bottom, but it is not yet confirmation of the triple bottom. For that we need a green candle with higher volumes. So if that happens, the triple bottom will be confirmed, and small cap index also can pull back up to 9,500 levels. This is where the resistance level is there. Now let us look at Nifty Bank chart. This is a Bank Nifty chart, daily chart. Here also we can see, market has closed at a crucial support level. It looks like a kind of double bottom again, but it is not yet confirmed. We need a pullback green candle with higher volumes. If that happens, Bank Nifty can go up to 41,300 to 41,500 levels in the coming weeks. Otherwise, the trend may, if it falls from here, if it breaks these levels, then we may see further down move in the Bank Nifty as well. So markets are at a crucial level. So next week will determine the further course of action. The traders have to wait for Monday and Tuesday, see the move, and then only they should take their positions. Now let us look at some of the fundamentals and economic indicators. RBI reserves for this week has come at 565 billion US dollars. It had dropped by around 9 million dollars compared to previous week. Crude price is at $82.81 per barrel. From 86 level, it has slightly corrected during this week. US dollar is at 82.93. It is more or less stable between 82 and 83 level. During this month so far, BII have bought, that is domestic institutions have bought 12,397 crores. FIIs have sold 4,508 crores during this month so far. In the recent days, the FII selling quantity has been coming down, but still selling continues. Last week there was some buying, but this week again they have started selling. Recently there was a India economic conclave in which RBI governor has stated that global economy is recovering slowly in the past few months. The recession in global markets or in global economies may not be very severe. This statement from RBI governor is a little positive for the markets. Now, what should investor do? The markets have corrected now. The correction started from the top somewhere during November, December of 2022, and it has continued for more than 1 year. So, this any correction is a good buying opportunity for long-term investors. They should choose good quality stocks and buy into those stocks for the long term. So any correction in Indian market is a good buying opportunity for a long term investor. I believe that India is in a long term bull market and there is lot of money yet to be made from the economic growth and the higher levels in the stock market for the long term investor. Mutual fund SIP investors are worried because they have got nil returns or negative returns for the last 1 year from their mutual fund investments. So I have pulled out some data. These corrections are a good opportunity for mutual fund investors to accumulate units. When they invest every month, they buy mutual fund units. So if the market is falling for 1 year, 2 years, it is a good opportunity. They can accumulate more units at lower levels. It is like buying shares at a lower price. So when the market picks up, the mutual fund investors will get very good returns. See, I have a data for these mutual fund investors. During 2008 global crisis, the markets corrected sharply, and in next 1.5 year, the market has come back to the same level. Sensex was at 20,000 level in January 2008, and it corrected up to 9,000 levels from 20,000 levels. And by December 2010, again came back to 20,000 level. The mutual fund investor who has invested 10,000 rupees in SIP, he is investing every month and he is accumulating units at lower level, at various level when the market falls. And by the end of December 2010, Sensex again came back at 20,000 levels. So market is at same levels, but mutual fund investor, because of he's buying every month, investing in every month, he got average price of the units, and he got a return of 27% CAGR on mutual fund investments. That is why investors should continue their SIPs and should not get worried during the market fall. So this is the magic of SIP. SIP is the best way to invest. I have got one more study. The same thing happened during COVID in January 2020. Market crashed heavily, and again in next 1 year, market came back to the same level. Here also, mutual fund investors have got 16% CAGR return during the market correction, and market has corrected and come back to same level. Sensex level was 42,200, and next 1 year, the Sensex has come back to the same level. Market has not given any returns, but mutual fund investor, since he is investing at different levels every month, he has got a return of 16% CAGR. That is why I request all mutual fund investors to continue their SIPs, and they will find their returns much higher and much better in next 2 to 3 years time when this correction is over and market picks up. So this is all for this week. If you like my video, please subscribe to my channel. You can share with your friends and you can ask your questions. We'll meet again next week. Thank you.